Hi, this is Russell Gray, co-host of the Real Estate Guys radio show, here for another edition of Boots on the Ground. And today, we're not talking about a geographic market necessarily. We're talking about a product niche, fourplexes. Fourplex is like the highest level of multifamily you can go before you switch over and have to start dealing with commercial loans and really what's called apartment lending. So to help us understand this is the multi-market man himself, Steve Olson from Fourplex Investment Group. How you doing, Steve?
Pretty good. How you holding up?
Good. I'm excited to hear from you. You know, one of the reasons I love doing these updates with you is you have a bigger picture. I mean, even though you're very narrow in your niche, new build fourplexes, you're actually in four different markets, right? Which four markets are you in?
We operate in the Salt Lake City, Houston, Phoenix, and Boise metro areas.
Okay. So that gives you a little bit of diversification, but you found a successful model building these fourplexes, specifically new build for investors, and then you put them in markets you think have good underpinning. So out of those four markets, are there any that you are particularly fond of as we sit here in August of 2020 in the midst of the COVID-19 crisis?
Yeah, I'm pretty fond of Utah right now. It's been doing pretty well through the COVID crisis, and so has Boise. You know, we like them all, but I was actually in Boise this morning, caught a
Okay.
flight back to Salt Lake City where our home base is, and
Well, you don't like Phoenix when it's 120?
well, we invited you up here once to speak in January, and you almost didn't do it. You were scared of the snow.
I'm not a
So
fan.
yeah, you're 120, the feeling's mutual, but I actually do have a couple personal properties under construction and reserved in our Phoenix market. So money talks. I obviously love that market too because I'm investing there, right? But what was really interesting, I went out to dinner in downtown Boise last night. What pandemic? I mean, that place was crazy. It was a Tuesday night. They've got these two streets that where a lot of the restaurants are. They were packed, and people walked around with masks and everything. But seeing these restaurant servers, these restaurants up and running, right, ringing the register, I like seeing it. I don't know what it means health wise. We'll see. But people were done with holding back. They are out, and the market was really humming. So it was
Yeah.
interesting to see.
Well, that, I mean, obviously anecdotal, but I'm seeing the same
Right.
thing. I went to dinner here in Arizona the other night, and it was the same thing. People had masks on, but the place was bustling, and that was it's good to see. So it's hard to suppress the human race, and when it comes to something as foundational as eating and sleeping and socializing, people are going to find a way, right?
They're
And
figuring out how to
so.
do it. Yeah.
Yeah, and so from our standpoint, when Robert and I talk about strategy, how do you invest in this type of thing? And we just got done doing our crisis investing series, which is rolling out on YouTube, and we've been getting a lot of views. You really have to focus on things that are essential, real and essential. Obviously, real estate fits, but not all real estate is booming right now. But we think that residential real estate is particularly strong because people may not go to stores anymore. They may not work in offices anymore, but they're probably going to sleep in a house somewhere, an apartment, a small multi-unit, a single family. Somehow, some way, people are going to have a roof over their head. That's pretty important. So I think that, you can bet that no matter what happens in life, people are going to find a way to do that. I think agriculture is another one that we've been focused on, markets that are energy supported, energy driven. I know you're in Houston and you could say, well, yeah, but oil's had it tough. Oil's not going to have it tough forever. That's a type of
No.
another thing you can't keep down forever. And of course, Salt Lake is a really interesting market, because I've been there, and it's you've got the lake, you've got the mountain. It reminds me a lot of kind of a hillier, high altitude Silicon Valley. In terms of the inability to really expand a lot of supply in the core. And you've got a really strong base of education and infrastructure that attracts population, it retains population, and it's a hardworking demographic that is productive, and that drives demand for housing and prices. I mean, that's what I see. I don't know. You tell me. I mean, you know more about the market.
Well, I asked our property management team this morning in preparation for this call that you and I were going to do, what has happened since the moratorium? wore off. And now you could argue there still is a moratorium. Trump does this executive order of no more evictions. What does that mean on the local level? We've had 20 delinquencies where people have moved out because of COVID across the entire portfolio. That's thousands of doors. And interestingly enough, what we've seen on the ground in these markets so far, you post that eviction notice, which nobody likes to do, but if somebody went dark on us back in April and is not talking to us, what choice do you have, right?
Right.
So you post that 3-day pay or quit notice. Most of those 20 people left on their own free will. They said, I'm out. Now, the few that didn't leave, where you actually have to proceed to get the sheriff involved, the judges seem to be just kind of punting that for 30 days, right? No matter what's going on, they say, yeah, you got to give this person 30 days, extenuating circumstances. That's still light years faster than an eviction in California.
Yes.
Right?
Sadly,
Which I
I'm
wonder if
familiar
you
with
could
that.
even do, but
Yeah.
yeah. So it's a very, very small portion of the portfolio that's going through that, where the judge has put a freeze on it. So we've seen that almost across every market that we're in, but it's a pretty small sample size. Most people have either moved on, but we've actually seen a lot of renewals. We're leasing new projects right now, right? And many listeners, the real estate guys, invest in those projects. Those are going a little slower than they normally would because of high renewals, people less likely to move
Right.
with what's
Right.
going on, but not a lot. I mean, we're getting anywhere from 3 to 10, 15 leases a week in each project that we're bringing online. So people are out there signing leases. It's
Okay.
happening.
And on the construction side, I mean, are you having any issues with supplies or labor or financing? Are you still able to just crank out your buildings?
Well, crank out, construction's a messy business. There's always something going on. We're doing okay with labor. Construction is an industry that's been hiring, right? We've seen jobs being shed in other industries. Construction's been expanding, and boy, do we need it, right? So we've been able to keep the labor relatively consistent and operate through this. I tell you, cabinet hardware is a bit of a pain, getting all that to come in on time. But you
Coming
can
in
work
from
around
China,
that.
I'm guessing.
Yeah, they've got a whole bunch of boats parked off of LA right now, and they've almost unloaded all the containers. And it's gonna, I don't know if you've seen this, there's been plenty of news coverage, but lumber's up double.
Yeah.
Lumber's crazy high. So we've been taking Fourplex reservations from our investors that have been locking prices. As we start to release new projects, those are going to go up because lumber's double. What can
that's
you do?
such a great point, Steve, because I think a lot of people don't understand in an environment, I think a lot of investors understand when you go through like an event like 2008, you have distress and you have existing inventory selling below replacement cost.
Right.
That's an opportunity to buy. If you can buy properties below what it's going to cost to build them later when the demand is there, then that's a deal. Well, this is a very similar circumstance, but for a different reason. Instead, today you're locking in your purchase of your materials, and now yet you're in a situation where the price is going up because these supply chains have been disrupted, and as long as you've got continuous demand in a marketplace, then the bid will continue to be there for the inventory existing and new, and you've got a competitive advantage because you've locked in your material costs. And then the other thing is, I mean, of course, who knows what's going to happen in the future of financing, but right now, residential 1-to-4 financing is like borderline free. And that is something I just think people should be filling up the shopping cart on, because you have an opportunity to lock in 30-year fixed financing on residential 1-to-4 at extremely favorable rates, which at some point down the road may end up being a big competitive advantage, because that's a big component of cost too in real estate, is the financing. So what are you guys seeing on the financing side for your takeout buyers when you sell something to somebody? What kind of loans are they getting? Are you getting hung up? Or the lending restrictions getting harder? Are you getting conditioned to death, or is the money still kind of flowing?
It's flowing pretty well, and it has flowed throughout the COVID crisis. You mentioned takeout financing. We've got 2 loans that happen in our deals because we're known for that pre-construction, right? If an investor is willing to take on a construction loan and go through, we give them a better price because they took that risk, right? Well, those construction loan rates are prime plus one, those are coming in around 5. Still, they've stayed tracked right with that. Then the refis are, wow, they're better. Most people are coming in under 4%
Yeah.
on a fourplex on a 30-year fix. I mean, any cheaper than that, then they're paying you to take the money.
Yeah.
And so that's been really good. We continue to project on our pro formas 4.25 to try to bake some uncertainty into the cake, knowing if somebody's refinancing in a year, you've got to have that in there. But yeah, most are coming in under 4 right now. If you want to pay a point, you're going to be even lower. So that's been very good. We haven't received much kickback. Our investors typically are 700 plus FICOs with good assets, and the lenders like them. They want those deals. So we haven't seen a lot of overlays or weird conditions or anything like that.
Nice. Well, we've been putting a lot of emphasis on build to rent because there's, a little bit of an inventory issue out there. And so it's tough if you're out there trying to buy existing stock. But if you're in a market that can absorb some of this, and of course, a lot of these markets right now have, because they're affordable, because they make sense, because they have good quality of life, because they have decent employment. You're finding people that had been trapped in these high price markets. We just got done talking to some folks in Florida, and their in-migration is huge because people are abandoning Chicago and New York and Boston and Baltimore. They're leaving those towns. And the reason they are is because they've just discovered they can work remotely. So they can go move to a low tax, high quality of life, low cost state, maybe even allow their employer to give them a little bit of a haircut on the salary, and yet their standard of living actually goes up. And of course, when they come, I mean, they may not necessarily be living in a fourplex like yours, but what they do bring is they bring their income and their expenses. And so when they're out there in the marketplace doing business locally, they create those tertiary jobs that end up being the tenants that live in a place like yours, or even the secondary jobs. Yeah.
I told you last night we had dinner in downtown Boise talking real estate. And this couple in the booth next to us was kind of eavesdropping on the conversation, and they introduced themselves. Sure enough, guess what? In town from Mission Viejo, California, trying to find a place to live. Can't find one, but still the pricing is way better. They're ready to get out. And that was just last night. And we see that happening in all of these states that we operate in the Intermountain West and in Texas. Net in-migration, in addition to a high natural childbirth as well.
Yeah, well, especially Salt Lake City.
Nobody makes more babies than
nobody
Salt Lake City.
makes more babies than Utah. Yeah, well, I mean, the markets that you're in, that makes sense because, I think I'm very high on the Phoenix market just because I think that the proximity to California and what's going on in California for a lot of people, especially Southern California, which is the bulk of the population base in California, it's a natural move. They're still close enough to their friends and family and even the beaches that they love. I mean, it's not super convenient, but you're not, you're not a plane flight away. You can still make that drive if you choose to. And you just get so much more for your money, and you still get the warm weather, and you have all of the big amenities. You got the sports teams and the restaurants and the shopping and the freeways and the medical, the education. I mean, everything you'd want to have. But the heat isn't everybody's cup of tea. And so that's where these other markets, like Salt Lake, Boise, I mean, I know because when I was looking to exit California, I visited all those markets. They were all on my list. Yeah. And, I ended up in Phoenix because I like the sun. But when I went through that experience, I realized what was happening. And so it made me very bullish on the Phoenix market. Of course, the challenge is the rents have been going up and the inventory is very low. So that's, again, goes back to this notion, at least from the investor point of view, the fact that you're building the inventory, you don't have to wait for it to come free. And for an investor who really wants to load up, or a syndicator, obviously we have our syndication program. Right. We have people that aren't just going to buy like one property. They're going to build a portfolio for their investors. They might be 10 or 20 properties, and they might mix them up in all 4 of your markets. And to be able to come to a guy like you and get market diversification, brand new product, and bulk, being able to buy it in bulk, that makes life a lot easier for a syndicator. So we should probably have a conversation about that offline because I think there's an opportunity there to present that to some of the folks in our club. But at
Yeah.
any rate, okay, well, it sounds like the financing is there. A little bit of trouble with the labor and the materials, but you're able to lock in the materials, so that's good. Any issues with land acquisition or being able to continue to kind of keep the pipeline going? How's that look?
Land is expensive. It's tough to get your hands on it, right? The news is out, so we are innovating different product types. Can we get the density we need to be profitable, but still pass on a good return to the end investor? So we've started doing, we do a lot of townhouse style fourplexes. We've been doing some more stacked flats. We look at expanding. Are there different parts of the market that make sense where maybe there's good land that you can buy, but you're also not stretching? We've looked at some land in Ogden, Utah. That's on the north side of the Salt Lake Metro that we hadn't previously done, but rents have come up enough there that the cap rate is attractive now. We've got a good project we're looking at there. We really work down the 303 and the 10 there on the west side of Phoenix. There's just tons of those logistical jobs there with the 10 feeding LA
Yeah, it's a
and going
big
clear
hub.
across the country. Yeah.
Yeah,
And
Phoenix
so
is a
there's a
big
good
hub.
need for housing out there because it's, for the working person, it's too expensive in Central Phoenix or Scottsdale or Mesa, right? But that west side in Surprise, Goodyear, some of those cities, that's where they need to be, and they're right near those jobs
Yeah.
that are
So
just keep
now,
packing into Phoenix.
Steve, are you looking at other markets, or are you just kind of like expanding your footprint in the four core markets you're in?
Well, we're looking at others. It's going to be a few years though, right? Because Phoenix is newer for us. We've got to get that tuned in, right? But we've been looking at markets in the Western United States, Colorado being one of them. Maybe some of the other major Texas metros would probably be on our short list.
Yeah. Okay, well, all that sounds good. So, well, you have a report that you've done for us. It's in our special reports library, but anybody watching it, it delivers an update really on all of the markets you're in. You can send an email to FIG, like Fourplex Investment Group, like Fig Newton, FIG Markets at realestateguysradio.com, FIG Markets at realestateguysradio.com, and then you'll get an update on all four of those markets. And Steve, you update that for us from time to time, so it's relatively current. Of course, we do these boots on the ground once a month so that people who really want to follow these markets and track on what you're doing and how the rapidly changing environment is affecting your model, good or bad, creating opportunities and challenges. And of course, the flip side of every challenge is an opportunity. So,
True.
It really just depends on how you choose to frame it. But, we're obviously always looking for opportunity. I mean, I like you, see a lot of positive things happening right now for real estate, for leveraged real estate, for residential real estate, and in particular, affordable residential real estate in the right markets. And I think you guys are just hit it center mass. So excited to stay in touch with you and have you keep bringing us these updates. And maybe one of these days, actually get out there and put my mask on and come see you.
Yeah.
I'd love to do that. But maybe look me up the next time you're here in the Phoenix area and we'll catch up.
That sounds good to me. I'll look you up and we'll stay in touch.
Okay. Any closing thoughts for the folks before we wrap this month up?
Yeah, if you're a real estate professional, you need to get into new construction and do a cost segregation study with the bonus depreciation. A lot of clients do that on these new build fourplexes. I just did one myself. It made my bank account very happy.
Yeah, I thought we were winding up, but let me just hit on that real quick because that's
Yeah.
huge. The first year, for anybody watching this, the first year that, you own and acquire a property, that's the thinnest cash flow because you're buying it whatever the market is, especially in a hot market, and bidders bid it up and it gets a little thin. But with cheap financing locked in for the long term, and if you catch a market that's on the rise, and I think you could make the argument pretty much every one of the markets you're in has growth potential, in different ways and for different reasons,
Sure.
but it's there. And then you you apply those deductions, that bonus, and that stuff goes away in 2022, I believe it is. So there's a window of opportunity for people who are in acquisition mode to kind of dump dollars, which I think was not a bad thing to do right now, get into real estate, income producing real estate, grab those tax deductions to make that first year ownership a lot easier. And when you go new build, you really don't have to worry that much about, deferred maintenance or hidden things. I mean, it's pretty much what you see is what you get. And then it's a lot easier to rent because, I mean, if you're a tenant out there, would you rather rent something old, something refurbished, or something brand new? Well,
Yeah.
obviously, refurbished is better than old, but brand new is the best of all. And so I think that, again, we're hot on build to rent right now, affordable in landlord friendly states, cheap financing, and take advantage of that cost segregation. So good point. All right, sir. Well, I appreciate your time today. And if anything breaks between now and the next one, give me a shout and we'll do something off rhythm. But otherwise, we'll just look forward to catching up with you. And again, anybody watching this wants that report, it's in the show notes below, but FIG Markets at realestateguysradio.com. Thanks a lot, Steve.
Good to see you again, Russ.
All right, you take care.
You too.